There we go. There we go. So here we go. So again, one of the things that we're talking about is the not first time home buyers, but mortgage financing 101. So I've already talked a little bit about bridge financing, RSP withdrawals, requirements for gifted down payment. So what's really interesting is that some financial institutions are actually asking for where the money for the down payment is coming from. So normally a gift letter that's just stamped by the financial institution is okay, but lots of times the lenders are asking the source of the down payment for which the parents are gifting. You know, and I think what's happened is that they're just wanting to make sure that the money is not related to fraud or proceeds of crime. And then I don't know about you guys, but I am doing more over $500,000 mortgages, and I'm sure you guys are doing more $1 million purchases these days. There are sliding scale requirements for properties that are over 500,000 and 1 million. So, like for example, if you're purchasing a property over a million, there's no insurance like CMHC or default insurance provided on that. So what we're obviously seeing right now is like a bit of a market compression where properties that are over a million, are not overvalued as much as properties that are under a million just because of the down payment requirements. So something to think about. This is related to capital. And remember, we were just chatting a little bit about credit history. So again, what we're talking about today is the 5 C's of credit and mortgage financing 101. We've talked a little bit about the requirements for credit history, how things are tightening up on that. We talked a little bit about just capital, which are the down payment requirements, and I reviewed bridge financing with you and how that works, where you need a firm offer on your purchase and sale. I wanted to dive into capacity, which is related to debt service ratios. And as you guys know, as of June the 1st, the stress test rate climbed from just under 4% to 5.25%. And just the general impact of that was that it, depending on the purchase price and the down payment, it decreased people's borrowing ability by about 5 to 8%. So if you have like decent credit, conventional financing, so like the TDs, the RBCs, the wholesale banks, the Scotias. Again, I just wanted to remind you that we do bank financing too. They're looking at very strict debt ratios. And I do find that a lot of people, if they're buying a fancy car, they're going to have a high car payment, and that's going to affect their total debt service ratio, right? And so that's really important. For alternative financing, we are doing more and more alternative loans, and the interest rates are actually fairly good. But with alternative financing, typically you need to have at least 20% equity in the property if you're doing a refinance, or at least 20 to 25% as a down payment. So just to kind of give you a comparison on interest rates, with conventional financing, depending on the amount for down payment and the loan amount and stuff like that, you'd be looking at a 5-year fixed rate of somewhere between 199 and 234. With alternative financing, there are very few variable rate options, but like alternative financing for like a 2-year term would be somewhere in the area of 2.74, 2.79%. The lender typically charges a 1 to 2% fee. It's like a self-insurance fee that's capitalized into the mortgage. And then the rates go up from there. We do quite a few mortgages with Wealth One Financial. They're a tier 1 bank, and their approach is more common sense lending. So we've gotten a lot of alternative loans pushed through, and typically their rates are somewhere between 3 and 3.79 for like a 3-year term, and they don't charge a lender fee. So that's really great. Self-employed financing has also become a little more trickier because there are lots of people who made lots of money over the course of the pandemic, and have been self-employed and were sole proprietors. But now for like income tax purposes, they've changed from being a sole proprietor to a corporation, and that's a real different entity because in the self-employed person's mind, they're saying, "Well, I'm making 300,000," but when the financial institution is looking at it, they're saying, "Well, your company's making 300,000, you're showing only 40,000 on your income taxes." So self-employed financing is really tricky. We have helped a lot of self-employed people who have been declined by their own financial institution get into homes or move up. So if you do have any self-employed clients, even if they have a mortgage with a RBC or a TD or a Meridian or whatever, have them come to us because we can say, because we work with those institutions and we can say, well, this is what you might be looking at if you stick with your own financial institution or a bank lender. But you know what? You can buy into the next purchase price range if we do alternative financing temporarily. So that's something. I have had also a lot of, on the capacity side, I also have had a lot of clients who have converted their existing homes to rental properties and then purchased another home. So now they're owning two homes. So that can be tricky because some financial institutions ask for a lease on their current home that they're living in. Whereas other institutions, what we can do is we can actually get an appraisal completed on their current primary residence that they're going to be converting into a secondary a rental property, and we can get an appraisal done completed with market rents. So those are just some of the interesting things that are happening as it relates to capacity. And then I wanted to talk a little bit about the next C of credit, which is character or job stability. So more and more financial institutions are sort of obviously looking at job stability in different ways. Normally, what would happen is if people were like on a base, a lot of Linamar employees are like this. They have a lot of piecework or opportunity to make more money through overtime. 2020 was a crummy year for people who worked in those types of jobs because they may have made 55 or 60,000 in 2019, and then now they're 2020 looks like they made 40,000, right? But they're on track to maybe make 50,000 this year. So it's super important when we're working with clients to get a clear picture on what their income has like been in the last like 2.5 years, and present a very clear history on not only what their income was in the past, but how stable the industry type is. Okay. Um, for probationary periods, if the person has been in that same type of work, we can often get an exception if they're on a probationary period. So, for example, I'm working with someone from the University of Guelph, and they've worked on contract there for 2 years and just landed a full-time job. And they've been in that job for 1 year, and it's a 4-month probationary period. We were able to get an exception on that job because it was in the same line of work. It was computer related. It was he was a computer technician, and he just ended up landing a full-time job. Contract employees are also tricky, especially as it relates to government employment, because normally the government and some types of employers will only employ people contract to contract. And they will only do like a 1-year contract. So we can use contract employment if they have been in that contract or that similar type of contract for at least 2 years. So teachers are a perfect example. Long-term vocational teachers, supply teachers, we can use their income. And then we can also use part-time work. So as long as it's permanent part-time, and we can get confirmation of the number of hours they've worked or what their permanent part-time work entails, we can use that as long as they have a history. So part of what you want to do is when you're talking to your clients, mortgage financing has really become an art. It's not anymore like let's enter all of this information and just send it to the lender and hope it sticks. Part of it is having making sure that your clients are working with somebody who understands the nuances of mortgage financing and can kind of present a good picture to the lenders. The last thing I wanted to mention to you is the collateral. And it's crazy. Thankfully, I think we've done a couple 100,000 not well. I've done over 11,000 mortgages, but we've done quite a few mortgages in the last couple of years, and we are just so lucky that a lot of our clients, we always worry about low appraised values. I think the last like 100 mortgages that I've done, we have only had two issues on low appraised values. And thankfully, in both cases, the clients were putting between 65 and 70% as a down payment. So the appraisal didn't adversely affect the type of financing that we were doing. I wanted to remind you when property appraisals happen. Okay. So if your borrowers are putting less than 20% down, the likelihood of an appraisal is very low. But if CMHC, Canada Guarantee, and Sagan, that's the new Genworth Financial, they are if the property purchase price doesn't fall within a certain value, they will actually do an appraisal on the property if the borrower is putting less than 20% down. Okay, the borrower doesn't have to pay for it. The default insurance will do it. So again, 99% of the time, clients don't need an appraisal on a property with less than 20% down. It does happen though, especially in more rural areas or unique properties where the auto valuation cannot happen. Normally when somebody has 25% down or more and it was requesting a 30-year amortization, and I'll explain why this is the case, the financial institutions 99% of the time require an appraisal. And the reason for that is if the borrowers are requesting a 20% down payment with a 25-year amortization, normally those mortgages are back-end insured. So the borrower doesn't pay the insurance premium, the lender does. And so because the lender's paying the default insurance premium, they still go through the same auto valuation. So just wanted to remind you, and that's what's happening on mortgage appraisals. Other common deficiencies in property are related to just the condition of the property, like a handyman special. Even if the borrowers are A plus and there's no kitchen in the property, for example, I dealt with a situation like that. They will not get the financing. The house has to be habitable. So just a couple of tips for you to help you prepare your clients for the financing piece, because most people, I find, I get a lot of calls from people who haven't even talked to a real estate agent, because most people know that they need to get pre-approved. So if you're talking to somebody who hasn't been pre-approved, that's always like a warning sign for me, because that's the standard common knowledge sort of process. So have your people, your buyers and your sellers alike, get pre-approved no matter what. Because if they're buying and selling, what's really neat is we have like a buy-sell spreadsheet and scenario where we can actually work in your real estate commission. So that helps you sell your services, right? Documents up front. So I find most people these days are pretty organized and know the importance of documents. We don't actually meet with clients until we actually have like a basic mortgage application and about 80% of the income documents up front. And the reason for that is we don't want to give people misinformation so that when they start working with you guys, they put an offer on a house and it falls through, right? And then I always talk to the sellers about bridge financing, because that is one of the least misunderstood pieces on financing. So if you guys haven't already downloaded our mortgage app, and I'll show you where you can download it, it is like the bomb. Okay, I'm not just saying that because it's our app, but and that's something that we direct all of our clients to download our app. They can do a quick pre-qualification, which kind of gives them at least a scenario. There's some real-time rate updates. So as interest rates change, you can see what's happening with interest rates. Clients can run scenarios for themselves. I mean, that's our job to do that, but you could also run scenarios for yourself, and it's on our website, and I'll show you where you can download it. And I love helping and working with good realtors like yourself. So if you enjoy attending these and the work that we do, I would certainly appreciate a Google review. And you can just Google the Mortgage Center, Guelph, and our Google profile will come up and you can do a review there. So that wraps things up for today. I did want to just show you quickly where so if you go to my website at skipthebank.ca and you just click on the top right-hand corner, you could see here that people can just download their app on the App Store on Google Play. And it's quite good. While we're here, I did also want to let you know that we've got one of the things that we've really innovated on in the last couple of years is clients. We actually haven't met anybody in person, like physically at our office, since probably February 2020. And we've really innovated in a way to capture clients' information in a really secure way. Clients can, all of our clients complete mortgage applications online and then upload them through a secure web portal. So I just wanted to show you if kind of what the customer is seeing, because you obviously want to work with a mortgage professional who is using technology in a good and secure way. I know that the banks are still requiring paper applications and like people to sign. I think I was talking to a friend of mine who works at TD. He said, we just got e-signing like 2 weeks ago. I'm like, oh my God. So anyway, they can always, they're always applying for a mortgage online. And you can just see how professional this is. And it's also people can actually do this um, on their phone too. So I'm not going to kind of go through this all with you, but you can see how easy it is for people to fill out an application. So it's not like an application like you would think. It's just almost a conversation. So that wraps things up. I'm going to just check to see if does anybody have any questions. I don't have any, but if you do have any questions, if you do go to my website, and let me just show this to you. If you do go to my website, let me just have a look here, and you have any questions, you can actually book an appointment with me, which is really great. So if you look here at the bottom, and again, you can do this on your phone, you can just book a telephone or an online appointment with me, and you can sort of see that I'm fairly booked up today, but tomorrow afternoon I'm free. So many of our clients, and I would encourage you to use this if you ever have a question, because I'm in and out of appointments for most of the day, but I'm always happy to answer any questions that you may have. You guys have a good day. Thanks for joining me, and go sell some real estate. Okay, bye-bye.